I spent 3 years building the most complex trading algorithm I could imagine, 200 indicators, machine learning, the works. It lost money. Then I switched to a strategy so simple, my 12-year-old nephew understood it in 5 minutes. It's been profitable for 2 years straight. Here's what Wall Street doesn't want you to know. Listen, we've all been there. You start trading and immediately you think, more indicators equals more profits, right? Wrong. Dead wrong. I've seen traders with screens that look like NASA control rooms, completely paralyzed because one indicator says buy, another says sell, and three more are flashing yellow. Here's the dirty secret. Complexity is the enemy of execution. When you have 47 different signals to consider, you know what happens. You freeze. You second guess. You miss the trade entirely. Or worse, you enter at the worst possible moment because you're so confused. Let me tell you about Mark. Mark was using Bollinger Bands, RSI, MACD, Fibonacci retracements, Elliott wave theory, and checking the planetary alignments for good measure. I'm barely joking. His win rate, 32%. He was bleeding money every single month. Then something clicked. He stripped everything down to just two things, a moving average and support and resistance levels. That's it. Nothing else. His win rate jumped to 58% within 3 months. Same market, same capital, completely different results. Why does this happen? Because simple strategies have fewer failure points. Think about it like a machine. A machine with 5 moving parts is more reliable than one with 500. Trading is exactly the same. Here's what the pros actually use. They pick 1 or 2 reliable indicators. They master price action. They understand support and resistance like the back of their hand. That's it. No magic, no complexity, just brutal simplicity executed with discipline. The market doesn't reward the smartest strategy. It rewards the most consistently executed one. And you can't execute consistently if you don't understand what you're doing. Simplicity breeds understanding. Understanding breeds confidence. Confidence breeds execution. So here's my challenge to you. Take whatever strategy you're using right now and cut it in half. Then cut it in half again. Get down to the absolute essentials. What's the one thing that actually makes you money? Focus on that. Master that. Because at the end of the day, your trading account doesn't care how sophisticated your strategy looks. It only cares about one number, profit. And simple strategies executed with discipline will beat complex ones every single time. FD 5300 words me do. I spent 3 years building the most complex trading algorithm I could imagine. 200 indicators, machine learning, the works. It lost money. Then I switched to a strategy so simple, my 12-year-old nephew understood it in 5 minutes. It's been profitable for 2 years straight. Here's what Wall Street doesn't want you to know. Listen, we've all been there. You start trading and immediately you think, more indicators equals more profits, right? Wrong. Dead wrong. I've seen traders with screens that look like NASA control rooms, completely paralyzed because one indicator says buy, another says sell, and 3 more are flashing yellow. It's absolute chaos and it's costing people thousands, sometimes hundreds of thousands of dollars. Here's the dirty secret that nobody in the financial industry wants to admit. Complexity is the enemy of execution. When you have 47 different signals to consider, you know what happens. You freeze. You second guess every single decision. You miss the trade entirely while you're trying to reconcile conflicting signals. Or worse, you enter at the worst possible moment because you're so confused that you just pull the trigger out of frustration. Let me tell you about Mark. Mark was a mechanical engineer, brilliant guy, really smart. He approached trading the way he approached engineering problems, with maximum precision and complexity. He was using Bollinger Bands, RSI, MACD, Fibonacci retracements, Elliott wave theory, volume profile, market breadth indicators, and I swear he was checking the planetary alignments for good measure. I'm barely joking about that last one. His trading desk had 4 monitors. Each monitor was divided into multiple charts. Each chart had at least 7 or 8 indicators overlaid on it. It looked impressive. It looked professional. It looked like he knew exactly what he was doing. His win rate, 32%. He was bleeding money every single month. His account was down 40% in the first year. Then something clicked for Mark. He went to a trading seminar and the speaker said something that changed everything. The best traders I know use the simplest strategies. Mark was skeptical at first, but he was also desperate, so he decided to try an experiment. He stripped everything down to just two things: a 200-day moving average and support and resistance levels. That's it. Nothing else. No fancy oscillators. No complex patterns. No mathematical models that required a PhD to understand. Just price, a moving average, and horizontal lines marking key levels. His win rate jumped to 58% within 3 months. Same market, same capital, same trader, completely different results. By the end of the year, he had recovered his losses and was up 35% for the year. What changed? The strategy became executable. Why does this happen? Because simple strategies have fewer failure points. Think about it like a machine. A machine with 5 moving parts is more reliable than one with 500 moving parts. Every additional component is another thing that can break, malfunction, or give you false information. Trading is exactly the same principle. When you have one indicator telling you to buy and another telling you to sell, which one do you trust? You end up either choosing randomly, which is essentially gambling, or you freeze and do nothing, missing opportunities left and right. But when you have a clear, simple rule, like buy when price bounces off support with momentum, there's no ambiguity. You know exactly what to do. Here's another story. Sarah was a doctor who got into trading to build wealth outside of her medical practice. She's incredibly intelligent, scored in the top percentile on every test she's ever taken. She approached trading the way she approached medicine, with research, analysis, and attention to every possible variable. She subscribed to 7 different trading services. She had custom indicators built by professional programmers. She was backtesting strategies with 15 years of historical data. She was reading every trading book she could find. She was watching 5 different financial news channels simultaneously. She was exhausted and overwhelmed. Her trading results, essentially break even, but when you factored in all the subscription costs, software fees, and the value of her time, she was actually losing money hand over fist. The emotional toll was even worse. She was stressed, sleeping poorly, and it was affecting her medical practice. Then she stumbled upon a concept called Occam's razor, the principle that the simplest explanation is usually the correct one. She wondered if this applied to trading, so she did something radical. She canceled all her subscriptions except one. She deleted all her custom indicators except a simple exponential moving average. She turned off the news entirely. She created a simple rule. If price is above the 50-day EMA and pulls back to touch it without breaking below, she buys. If price is below the 50-day EMA and rallies up to touch it without breaking above, she sells short. That's it. One indicator, one rule, incredibly simple. Within 6 months, she was consistently profitable. Not just a little bit profitable. She was averaging 6% returns per month. She was sleeping better. She was enjoying trading again instead of dreading it. She had her life back because she could make trading decisions in minutes instead of hours. The pattern here is clear, but let me spell it out explicitly because this is crucial. Complexity creates decision paralysis, and decision paralysis is the enemy of profitable trading. Here's what the professionals actually use, and I mean the real professionals who manage billions of dollars, not the guys selling courses online. They pick 1 or 2 reliable indicators maximum. They master price action, the raw movement of price without any indicators at all. They understand support and resistance like the back of their hand because these are the levels where big money actually cares about price. Let me break down why simple strategies work better from a psychological standpoint, because trading psychology is 80% of the game. When you have a simple strategy, you can backtest it thoroughly and build genuine confidence in it. You've seen it work hundreds of times in historical data. You understand exactly why it works. You can articulate the edge clearly. But when you have a complex strategy with multiple indicators that have to align perfectly, you can't really backtest it effectively. There are too many variables. You can't hold it all in your head. You don't really understand why it works. You just hope it does. And hope is not a trading strategy. Confidence breeds execution. When you're confident in your strategy, you take the trade without hesitation. You follow your rules precisely. You don't second guess yourself mid-trade. And consistent execution is what separates profitable traders from everyone else. Let me give you a specific example of how simple beats complex in real market conditions. Let's say you're trading stocks and you want to catch momentum moves. The complex approach would be: wait for RSI to cross above 50, MACD to cross bullish, volume to exceed the 20-day average by at least 30%, price to break above the upper Bollinger Band, and momentum to be confirmed by a positive reading on 3 different time frames. How often does all of that line up perfectly? Almost never. And when it does, you've probably missed half the move already because you were waiting for confirmation number 7 to trigger. The simple approach: price breaks above a major resistance level on high volume. That's it. 2 things to check: resistance break and volume confirmation. You can identify this in literally 3 seconds. You execute immediately. You catch the move from the beginning instead of the middle. Your win rate and your profit per trade both improve dramatically. Now I know what some of you are thinking, but don't simple strategies get arbitraged away? Don't they stop working because everyone knows about them? This is actually a fascinating question, and the answer is counterintuitive. Simple strategies continue to work not in spite of everyone knowing about them, but because everyone knowing about them creates self-fulfilling prophecies. Support and resistance work because everyone watches them. Moving averages work because institutional traders use them as reference points. Breakouts work because they trigger stops and attract momentum traders. Complex strategies, on the other hand, are usually overfit to historical data. They worked perfectly in backtesting because they were designed to fit the past perfectly. But they fail in real-time trading because the market conditions change slightly and the strategy can't adapt. It's like building a key that fits one specific lock perfectly, but won't work on any other lock ever made. Let me tell you about the simplest profitable strategy I've ever seen. A friend of mine, retired now, traded for 30 years using nothing but trend lines. That's it. He would draw trend lines connecting the lows in an uptrend and connecting the highs in a downtrend. When price bounced off the trend line, he bought or sold. When price broke the trend line, he exited. No indicators, no complex analysis, just lines connecting price points and basic pattern recognition. He retired at 55 years old, financially independent from trading alone. He used to joke that he made millions of dollars with a ruler and a pencil. The beauty of his strategy was that he could make decisions instantly. He could manage dozens of positions easily because the rules were so clear. He was never stressed or confused. He never missed opportunities because he was overanalyzing. He just executed his simple plan day after day, year after year. Here's another critical advantage of simple strategies. You can actually stick to them during losing streaks. Every strategy has losing streaks. That's just the nature of trading. But when you have a complex strategy and hit a rough patch, you don't know what's wrong. Is indicator number 3 broken? Should you adjust the parameters on indicator number 5? Should you add another confirmation signal? You start tinkering. You start changing things. And every time you change your strategy, you're essentially starting over with 0 track record. You have no idea if your improvements actually improve anything or make things worse. But with a simple strategy, when you hit a losing streak, you can review your trades quickly and see exactly what happened. Maybe the market environment shifted from trending to choppy. Maybe you got sloppy with your execution. Maybe you just hit normal statistical variance and you need to keep following the plan. You can diagnose the issue and either adjust your approach or recognize that you just need to stay the course. This clarity is invaluable. It keeps you from making emotional decisions that destroy your account. Let me share some specific simple strategies that have stood the test of time, just to give you concrete examples of what I'm talking about. Strategy 1. The moving average crossover. When a fast-moving average crosses above a slow-moving average, you buy. When it crosses below, you sell. People have been using this for 50 years. It still works. Is it perfect? Number, does it catch most major trends? Absolutely. Strategy 2, breakout trading. You identify a price range where an asset has been consolidating. When price breaks above the range with volume, you buy. When it breaks below, you sell. Simple, clear, executable. Strategy 3, support and resistance bounces. You identify key levels where price has reversed in the past. When price approaches those levels and shows signs of revering again, you trade the bounce. Clean, straightforward, time-tested. None of these strategies require a PhD in mathematics. None of them require expensive software. None of them require watching 12 charts simultaneously. They're simple, but they work because they're based on fundamental market behavior that doesn't change. Now let's talk about why the financial industry pushes complexity. This is important to understand because you're being marketed to constantly, and the marketing is designed to make you feel like you need more. More indicators, more data, more complexity. Here's the truth: complexity sells. Software companies make more money selling you platforms with 500 indicators than platforms with 5 indicators. Educators can charge more for courses on advanced trading techniques than basic price action. Financial media needs to fill 24 hours of programming, so they discuss every tiny market nuance and make everything sound complicated. But the actual professional traders, the ones managing billions at hedge funds and institutions, they use relatively simple strategies. They just execute them with massive capital, strict risk management, and unwavering discipline. The complexity isn't in the strategy itself, it's in the risk management, position sizing, and portfolio construction around the strategy. Think about the most successful traders in history. Paul Tudor Jones predicted the 1987 crash using technical analysis, basically just chart patterns. George Soros broke the Bank of England with a simple macroeconomic thesis executed with conviction. Jesse Livermore made and lost fortunes multiple times using nothing but price action and market psychology. None of these legends needed 47 indicators. They needed clarity, discipline, and the courage to execute when their simple rules said to trade. Here's a framework for simplifying your own trading strategy. First, identify what type of trader you are. Are you a trend follower, a mean reversion trader, a breakout trader? You can't be all three, so pick one that matches your personality and schedule. Second, choose one primary indicator or analysis method. If you're a trend follower, maybe it's a moving average. If you're a mean reversion trader, maybe it's Bollinger Bands or RSI. If you're a breakout trader, maybe you don't need any indicators at all, just price levels and volume. Third, define your entry rules in one sentence. I buy when price closes above the 50-day moving average after being below it for at least 10 days. That's it. One sentence. If you can't explain your entry in one sentence, it's too complex. Fourth, define your exit rules in one sentence. I sell when price closes below the 50-day moving average. Simple, clear, no ambiguity. Fifth, define your risk management in one sentence. I risk 1% of my account on each trade with a stop loss set 2 ATR below my entry. Done. You now have a complete trading strategy that fits on an index card. Can you test this strategy? Yes, easily. Can you execute it consistently? Yes, because it's simple. Will it be perfect? No, but perfection isn't the goal. Consistency and profitability are the goals, and simple strategies achieve both far more reliably than complex ones. Let me address a common objection. But what about market conditions changing? Don't I need multiple strategies and indicators to adapt? No, you actually don't. What you need is the discipline to recognize when your strategy is in sync with current market conditions and when it's not. Simple strategies work great in certain market environments and poorly in others. That's fine. When your trend-following strategy is working, you trade it aggressively. When the market becomes choppy and your strategy starts losing, you reduce position size or sit on your hands. This is called market awareness, and it doesn't require complexity. In fact, it's easier to develop market awareness when you have a simple strategy because you can clearly see when it's working and when it's not. With a complex strategy, every losing trade leads to endless analysis. Was it indicator 3? Was my parameter on indicator 7 wrong? Should I add indicator 8? You never develop true market awareness because you're always questioning the strategy itself. Here's a practical exercise I give to traders who are struggling with complexity. Take your current trading setup and remove one indicator, just one. Trade for a week and see if your results get worse. If they don't get worse, and usually they don't, remove another indicator. Keep doing this until you're down to the absolute minimum that actually improves your decision making. Most traders discover that 80% of their indicators were just noise. They weren't helping. They were actually hurting by creating confusion and decision paralysis. The relief they feel when they finally have a clean, simple chart is palpable. Suddenly trading becomes enjoyable again instead of overwhelming. Let me share one final story that really drives this point home. There was a famous trading competition several years ago. Professional traders competed against each other for the best returns over a year. The winner was a guy who used one of the simplest strategies imaginable. He only traded one stock, he only bought when it dipped to support, and he only held for a few days. That's it, one stock, one pattern, simple entries and exits. He beat traders using artificial intelligence, complex algorithms, and multi-factor models. Why? Because he executed his simple strategy perfectly. He knew that one stock better than anyone else. He recognized the pattern instantly. He never second-guessed himself. He just executed. The other traders were spread across multiple markets, trying to optimize multiple strategies, constantly adjusting and tweaking. They were playing chess with 100 pieces while he was playing checkers and winning consistently. This is the power of simplicity. It allows for mastery. You can't master 47 different indicators and how they interact across multiple timeframes and multiple markets. But you can absolutely master one simple approach and become exceptional at executing it. So here's my challenge to you, and I'm completely serious about this. Take whatever strategy you're using right now and cut it in half. Then cut it in half again. Get down to the absolute essentials. What's the one thing that actually makes you money? What's the core edge that your strategy exploits? Focus on that. Master that. Remove everything that doesn't directly contribute to identifying and executing that edge. Be ruthless about it. Every indicator you remove is one less thing to go wrong, one less thing to cause confusion, one less thing to maintain and monitor. You'll probably feel naked at first. Your charts will look too simple. You'll worry that you're missing important information. That's normal. Push through it. Give your simplified strategy at least 50 trades before you judge it. Track your results meticulously. What you'll almost certainly discover is that your win rate improves, your average profit per trade improves, and your stress level decreases dramatically. You'll make decisions faster and with more confidence. You'll miss fewer opportunities because you're not paralyzed by analysis. You'll stick to your rules more consistently because they're crystal clear. And here's the beautiful part. As your simple strategy proves itself over time, your confidence will compound. You'll trust your rules more. You'll execute them more precisely. You'll handle losing streaks better because you understand your edge. This positive feedback loop is how profitable traders are built. The market doesn't reward the smartest strategy or the most complex algorithm. It rewards consistent execution of a strategy with a genuine edge. And you simply cannot execute consistently if you don't understand what you're doing at a deep, intuitive level. Simplicity breeds understanding. Understanding breeds confidence. Confidence breeds execution. Execution breeds profits. Think about any skill you've truly mastered in your life. Whether it's a sport, a musical instrument, a craft, whatever. You didn't master it by making it more complex. You mastered it by breaking it down to fundamental principles and practicing those fundamentals until they became second nature. Trading is exactly the same. The best traders aren't the ones with the most indicators or the fanciest algorithms. They're the ones who have internalized a simple approach so deeply that execution becomes automatic. They see their setup, they execute, they manage the trade, they move on. No drama, no second guessing, no complexity. Because at the end of the day, your trading account doesn't care how sophisticated your strategy looks. It doesn't care how many hours you spent backtesting or how expensive your software is. It only cares about one number, profit. And simple strategies, executed with discipline and consistency, will beat complex ones every single time. So strip away the noise, cut through the complexity, find your simple edge and execute it relentlessly. That's how you beat the market. That's how you build wealth through trading. That's how you win.